Here is a statement of the Monetary Policy Committee. There are signs that the global economic recovery is underway, but indications are that the pace of recovery is likely to be slow and uneven, particularly in the industrialized economies, where banking sector concerns still persist. Domestic economic growth, which has been negative in each of the past 3 quarters, is expected to improve in the coming quarters. However, the domestic recovery is likely to be influenced by global growth developments and is subject to a relatively high degree of uncertainty. Domestic inflation has continued its downward trend, but some risks to the outlook remain. The year-on-year inflation rate, as measured by the Consumer Price Index for all urban areas, declined to 6.4% in August, compared with 6.7% in July. The main contributing factors to the inflation outcome were the categories of housing and utilities and miscellaneous goods and services. Food price inflation moderated further, with food and alcoholic beverages increasing at a year-on-year rate of 6.8%, down from 8.3% in July. Producer prices have continued their negative trend and declined at a year-on-year rate of 3.8% in July, compared with a decline of 4.1% in June. Food price inflation at the consumer level can be expected to abate somewhat as agricultural product prices declined at a year-on-year rate of 1.7%, while manufactured food product prices increased at a rate of 0.8%. Upward pressure on producer prices came from electricity prices, which increased by 27.4%. The CPI inflation forecast by the South African Reserve Bank staff continues to indicate that inflation is likely to return on a sustained basis to within the inflation target range by the second quarter of 2010. CPI inflation is then expected to remain within the inflation target range for the remainder of the forecast period until the end of 2011. Compared with the previous forecast, the outlook is unchanged for 2009 and 2010, although there is a slight improvement for 2011. The exchange rate of the rand has provided downward pressure, which has more or less offset higher oil prices in the assumptions, and also the higher unit labor costs over the period. The most recent study of inflation expectations, undertaken on behalf of the bank by the Bureau for Economic Research at the Stellenbosch University, indicates that inflation expectations have improved somewhat, but remain on average above the upper end of the inflation target range. Inflation is expected, in terms of this survey, to average 7.5% in both 2010 and 2011. This represents declines of 0.6% and 0.4% in these years respectively, compared with the previous survey. Financial analysts expect inflation to be within the target range in the coming 2 years. Since the previous meeting of the MPC, the break-even inflation rate, as measured by the yield differential between conventional government bonds and inflation-linked bonds, declined across all maturities to within the inflation target range. Overall, the risks to the inflation outlook appear to be fairly evenly balanced. The main upside risks continue to emanate from high increases in some administered prices, particularly electricity prices, and increases in nominal unit labor costs well in excess of the current inflation rate. Nominal unit labor costs increased over 4 quarters by 9.3% in the second quarter of 2009, compared with 11.3% in the previous quarter. International oil prices, which remain an upside risk to inflation, have moderated slightly since the previous meeting of the Monetary Policy Committee and appear to have stabilized around current levels of about $70 per barrel. Domestic petrol prices increased by 36 cents per liter in September, as we know, but the current over-recovery indicates that this increase may be offset to a large extent in October as a result of lower product prices and the recent appreciation of the rand. Growth in domestic final demand declined at an annualized rate of 3.5% in the second quarter of 2009. Household consumption expenditure contracted by 5.8%, compared with a decline of 4.8% in the previous quarter. Durable goods consumption was the most affected subcategory, declining by 18.8%. New vehicle sales declined at a year-on-year rate of 23% in August, but there are signs that the decline is leveling out. In July, real retail and wholesale trade sales contracted at year-on-year rates of 3.8 and 13.8% respectively, although retail sales increased on a month-on-month basis. Consumption expenditure is expected to remain constrained by negative wealth effects, although there's been a marked recovery in the equity markets, which may relieve these effects somewhat. Since the beginning of the year, the all-share index on the JSE Limited has increased by about 20%. House prices, however, have continued their downward trend. The various house price indices, while still indicating negative price trends, show that prices are declining at a slower rate. Credit extension to the private sector continued to reflect both the weak household consumption expenditure and the prevailing tighter credit criteria, or prevailing tighter credit environment. 12-month growth in banks' total loans and advances declined to 2.1% in July. Mortgage advances declined to a year-on-year rate of growth of 6.4% in July, while installment sale credit and leasing finance contracted by 3.2% over the same period as a result of subdued demand for motor vehicles and other durable goods. Other loans and advances comprising credit card advances, bank overdrafts, and general loans declined by 2%. Lower levels of credit extension have resulted in a slight decline in household debt as a percentage of household disposable income to 73% in the second quarter of 2009. The ratio of debt service costs to household disposable income declined from 10.9% in the first quarter to 9.5% in the second quarter. Domestic output contracted by 3% in the second quarter of 2009, as we know, but there are early indications that the lower turning point may have been reached. However, the recovery is expected to be slow. The South African Reserve Bank's composite leading indicator increased for the third consecutive month in June and continues to predict a recovery by the end of the year. The rate of contraction in the manufacturing sector also shows signs of slowing down. On a year-on-year basis, manufacturing output declined by 13.7% in July, but it increased at an annualized month-on-month rate of 3%. The Kagiso BR Purchasing Managers Index, PMI, increased in July, although still at levels that indicate negative economic growth. Mining production increased at a year-on-year rate of 4.8% in July. However, the real value of building plans passed declined by 43.2% in July, with a slowdown in residential building plans being the main contributor. The exchange rate of the rand continues to provide downward pressure on inflation and has appreciated further since the previous meeting of the Monetary Policy Committee, when it was at a level of around 8 rand 10 cents to the US dollar. Since the beginning of the year, the rand has appreciated by 26% against the US dollar and by 20% on a trade-weighted basis. The global economy appears to be recovering in response to the concerted fiscal and monetary packages which have been put in place. A number of industrialized economies have experienced positive growth rates in the second quarter, while others have shown a moderation in the rate of contraction. Many forecasts for the second half of the year and for 2010 have been revised upwards, but remain well below pre-crisis levels. However, there are risks that the recovery may be short-lived should consumer demand not improve further in the industrialized economies. Whilst there have been some improvements in financial market conditions, more still remains to be done. Global inflation remains relatively subdued and poses no immediate risk to the inflation outlook. I now come to the monetary policy stance. The Monetary Policy Committee is of the view that the risks to the inflation outlook appear to be fairly evenly balanced. Given the current policy stance, inflation is expected to continue moderating and to return to within the inflation target range during the forecast period. Accordingly, the Monetary Policy Committee has decided to leave the repo rate unchanged at 7% per annum. That is the statement of the Monetary Policy Committee. Are there any questions? Yes, sir.
Good day, Mr. Governor. Governor Vernon Vessels of Bloomberg News.
Good afternoon.
With the repo rate unchanged, it will still mean that we're looking at negative real interest rates. What is your view on negative real interest rates and what that and the consequences thereof?
Well, I think one should focus more on the real repo. And the real repo is slightly positive, so that shouldn't be a problem. The general view that I hold, and I hope members of the MPC also hold that view, is that negative real interest rates are not to be recommended. Miriam.
Good afternoon, Governor.
Good afternoon.
I was wondering if you could elaborate on the consequences of the rand on the economy last week. You mentioned that the central bank was concerned about the imbalances. Obviously, leaving the repo rate unchanged would suggest that the rand, has no reason to weaken. So, well, apart from the repo decision, I was wondering if if the bank remains concerned and if the positive effects of the strong rand on inflation outweigh the negative effects on manufacturing.
Okay. The bank does remain concerned with the appreciation so far. But it's not something that the Monetary Policy Committee spent time debating. We noted the fact that the current levels of the exchange rate do offset the other negative factors to inflation, such as higher oil prices or unit labor costs and so on. So the exchange rate at the moment is very helpful to the inflation outcomes, but indeed it might not be very helpful for the overall balance in the macro economy. No more about the exchange rate. Yes, sir.
SABC News. What is your assessment of the 500 basis point cuts that we've had since December last year on the economy?
Yes. Well, there's been no cuts, but most certainly there have been reductions in the repo. As you can see in the statement, we say that given the current monetary policy stance, we are quite convinced that inflation should return to within the target range. In other words, all reductions which have happened are, in our view, sufficient to still help us come within the target range. So that's the assessment. Yes, ma'am.
Good afternoon, Governor. Candy from Summit
Good
TV.
afternoon, Candy.
Great, and you?
I'm happening.
Governor, personally, is there further room for yet another rate reduction going forward?
I don't know.
And secondly, how difficult or how easy was it to reach today's decision?
I think today's decision was reached fairly quickly. There was no other voice in the committee that argued for a different approach or a different stance. So it was a truly unanimous a decision. In fact, we spent a lot of time on drafting the statement than on the decision. Having to argue, for example, whether when you conduct a survey you are conducting a study or so on. And you see the word study ended up in the text. But it's a long debate about it. That's the nature of the committee. Yes, ma'am.
Governor, good afternoon. Renee Volgerau from Sake 24 that goes into the Afrikaans daily papers.
Good afternoon. What about the English?
No. Someone else has to cater for the English.
Oh, okay. So you mean the Anglo-Boer War is not resolved yet?
I wouldn't want to do that now on live TV. Governor, when does the bank or the MPC expect economic growth to turn positive again?
We were saying that early indications, are that towards the end of the year, we might begin to see an improvement. But from some of the forecasts that were presented to us, I think one can, with some degree of confidence, say maybe the first quarter of next year should see some significant improvement. Yes, ma'am.
Hi, Governor. Samantha Loring from CNBC Africa.
Good afternoon, Samantha.
Good afternoon. In terms of the inflation outlook, you mentioned that international inflation isn't an immediate concern for the domestic inflation outlook.
Yes.
But there have been a lot of concerns that inflation further down the line is going to start seeping through into the global economy. Is that something that you take into consideration at meetings like this? And do you have a forecast for when? Is it a concern that international inflation is going to pick up in, say, 1-2 years' time?
I think the forecast for the global inflation outcomes that we use are those presented by international organizations such as the IMF or the OECD. But in particular, I think we focus on the one from the IMF, which indicates that inflation is fairly subdued. Slight pickup, but still not of major concern in the forecast period. But anything can happen, but there's not much inflation really to worry about globally.
Governor, in the past MPCs, you've raised concerns about the structural rigidity that is hampering the full impact of interest rate reduction. Are you still concerned about that?
Yes. We are still concerned about the structural rigidities which are there. And as I said before, we would like to urge our colleagues who work in other areas of the economy to continue their focus on microeconomic reforms, which over time should contribute to a far more flexible economy. So yes, we are concerned, but also I think business and other stakeholders should also continue to be interested in these rigidities. I mean, if you look at the pricing of certain products in the economy, one can see the impact that such pricing has on inflation, and it's a rigidity that needs to needs to be handled. I'm talking, for example, if you look at steel pricing, this is a major issue of concern. But there are other sections of the economy as well. Miriam Issa.
Thank you, Governor. One more question. Some people are saying that the economy could notch up some kind of positive growth in the third quarter and that inflation might briefly dip below 6% before the end of the year. What is the MPC's view on these two matters?
As I said, as far as the growth forecasts are concerned, we said that maybe towards the end of the year we might begin to see some positive growth, but more firmly, I think, in the first quarter of next year. As far as the inflation outlook is concerned, I think we should just stick to what is in the statement, which will be the view of the committee, as I indicated. I mean, one has to not take into account, but one has to listen to what some economists are saying out there in the market. But we have to do our own analysis and reach our own conclusions, as we have done today. Yes, ma'am, you had a question?
Just slightly unrelated. Slightly.
Yes.
Consulta yesterday made very strong views regarding, policy, monetary policy, and they, quote, said, we have irresponsible policy, especially within the Reserve Bank, and they've made statements, sort of, their views is that they need to deliberate on who actually runs the Reserve Bank and which department in the government should be politically sort of responsible for it in government. So just sort of, your views on that, or comment perhaps.
I haven't seen the documentation that is serving before the COSATU Congress. I'll be going there this afternoon to visit. And hopefully I'll be in a position to read or hear what the position of the Federation is. But it's a view, if that has been said. It's a viewpoint in society. And I'm sure it can be debated. But one thing that is clear, and I think there should be no doubt about it, is that the South African government has decided that there should be an inflation targeting monetary policy framework. And that inflation targeting policy framework is seen as a major component of macroeconomic policy in South Africa. So we have an inflation target range of the consumer price index for all urban areas of 6 to 3%. That position has not changed. And it's important that that is explained and understood. Until such time that the government has changed this inflation targeting framework, the South African Reserve Bank has an obligation to implement that policy framework. Now, you could say, scrap inflation targeting. Well, fine. But the South African Reserve Bank will still pursue low inflation. In fact, by scrapping inflation targeting, you run the risk that the bank will pursue an even lower inflation rate. So, and there's no such a thing as the South African Reserve Bank having a policy of high interest rates. I have never come across such a policy in my 10 or 11 years here. So, but discussion, debate, I think is important in society. But I want to make sure that we are very clear that even as we debate, the policy framework is that of inflation targeting. The inflation target is CPI, which must fall within the 6 to 3%. There's been no change in policy. The bank is independent. It's not a government department. And pursues its objectives independently, without fear, favor, or prejudice. And it's very important that is understood. And as I say, I have not been informed of any changes in the policy framework. So I operate, and together with the MPC, on the basis of the mandate given to us by the government. I think that should be clear. Okay. Yes, ma'am. No, hey. Keep forgetting your name.
Samantha.
Oh, Samantha.
Governor, just with regards to the next MPC meeting, which are the key economic indicators that you're going to be keeping your eye on for if there is a serious deterioration there, it would necessitate another interest rate cut?
Well, that's a bit of a wide one, that one.
Okay. I mean, I don't know if there are.
What economic indicators is the Monetary Policy Committee going to look at?
Well,
the Monetary Policy Committee will continue to look at all the data available before us to try and understand if there are any pressure points for inflation, what are the risks, upside risks to inflation, what are the downside risks to inflation. What is the inflation rate doing to contribute to the economy? We want it to be lower. And the lower the inflation rate, obviously the better for everybody. So
are there any specific
that data,
ones,
well, that data is going to be forthcoming. So far we looked at the data up to that we have today. And then further data, I'm sure, is going to come along as we approach the next meeting. Gordon?
Governor, can you give us your views, Gordon Bell, Reuters News Agency. Can you give us your views on the MTN Bharti deal and a lot of speculation of money coming in?
No, the MPC wouldn't discuss that at all. If the issue was discussed in future, it will probably be discussed maybe in the Governor's Executive Committee. The MPC does not have the competence to discuss that. It's not competent to discuss that. Feno?
Thanks, Governor. If the inflation outlook is, if inflation can remain within the target to the end until 2011, and the risks are evenly posed, why not take the chance? Why not cement the economic recovery by perhaps lowering the interest rate today?
Well, as we say in the statement, the risks are evenly balanced in our assessment, and that's why we think that the policy stance we've taken is appropriate for the economy and for inflation going forward. We are not in the business of taking risks. It's not our business. Last question, Miriam.
Thank you, Governor. How big a role did the BR inflation expectations survey play in the decision today? And is the MPC concerned by the fact that only financial analysts see inflation within the target in the next couple of years?
The survey is but one of the many inputs which served before the MPC. So, yes, we looked at the outcomes of the survey study and draw some encouragement from the fact that the expectations are still, coming down, although marginally, but coming down. They're not on the opposite side, which I think is very good. So that's the role that the inflation expectation survey plays in the decision-making process. And I think that will be it, isn't it? That's it. Venom? That's it. That's it. Good? Yeah. Okay, good. Thank you very much. We'll see you in October.